Coming back to the working capital management portions in financial management based on I.M. Pandey's textbook, now I will be dealing various important problems in the working capital management. First type of problem is that estimation of working capital. That is one category of problem which usually comes for the examination, and it's very important part of decision making theory. Now, as I told, working capital is all about current assets and current liabilities. Checking the current assets and current liabilities position, and from the current assets, which is called as gross working capital, we will deduct the current liabilities, we will find out the net working capital. That is the same thing we are studying under this problem. Calculation of net working capital. It's all about current assets minus current liabilities. Now, the organization could estimate how much net working capital they have to keep based on the past data. So this is all about the problem. I will go through the question first. The information given will be, we'll see the bifurcation of the cost of the product and profit and sales will be given a per unit basis. For example, you could see that here raw material per unit is 50 for a particular type of product. The raw material is 52 per unit, not 50, 52 per unit. Direct labor per unit is 19.5 rupees. Overhead is 39 rupees. And the total cost, direct material plus direct labor plus overheads. Overhead is actually indirect cost. Okay, for that particular product is 110.50. Okay, so the total cost of the product will be given, and the profit margin is 19.50. So this is all about the first set of problem, that is the information regarding a particular product cost and its profit and sale price will be given. Another important factor which will be given in the question is the level of activity. It is also based on the past data information that around 70,000 units of output will be averagely produced by the organization. Okay, and certain other informations will be given. That is the average raw material in stock. The company should maintain average 1 month raw material in stock. That is its meaning. Work in progress, half a month is the average basis. Credit allowed by suppliers is 1 month. That is very important. I told in the working capital cycle, that credit of the suppliers is very important, because from the suppliers, from the debtors money only we could meet the suppliers. So this margin of gap will be given. Credit allowed by suppliers to make the payment for the purchase of raw material is 1 month on average basis. Okay, and credit allowed to debtors is 2 months. That is minimum period we allowed for debtors is 2 months. That will be given. Overhead time lag and labor wages, that is outstanding or deferred payments. Certain information will be given, that is a time lag for the debtors or time lag for the payment due. Deferred payments will also, or outstanding payment will be given in the question. And other information which will be given in the question is the cash balance, which is usually maintained by the organization, will be given, that is 1,20,000. And another important or extra information given is that 1/4 of the sales are occurred on cash basis. So this is all about the problem. Once more I will repeat, the total outputs will be given, and the per unit cost split will be given, the per unit sale price will be given, profit per unit will be given, then the average working capital cycle, the period of the working capital cycle, period incurred in the working capital cycle will be given regarding raw material, and the cash balance etc. will be given. What you have to find out is that we have to find out the net working capital. We have to find out the net working capital from the existing position. So the product price is given, then the unit produced is given, the working capital cycle periods will be given, and some other extra information is given. We could check how the problem is being done. This is how the problem is being done. We have to find out the current assets minus current liability equation, net working capital. So what constitutes current assets? Current assets all you know, that is current assets includes inventory plus debtors plus cash or bills receivable if any, all those constitutes current assets. And what constitutes current liabilities? So first I am putting current assets and second I am taking current liabilities. Current liabilities includes bills payable if any, it's not there in the problem. Bills receivable is also not there in the problem. So creditors will be there, first I am taking that. Then outstanding, these two things are outstanding. Okay, outstanding payments will be there. Okay, that is what is called mentioned as deferred wages and deferred overheads. So from the total current assets, first current assets we are taking, total of current assets we are deducting current liabilities, we'll get net working capital. Let us see how it is being done. Let us take the question once more. Total units produced is 70,000. So the problem will be entirely based on this 70,000 units produced. So that is very important factor. We have to first take into consideration how much units the company is going to produce. So the calculation of net working capital which we have to find out will be based on the total units to be produced by the company. It is for this net working capital is applicable for 70,000 units being produced. So 70,000 we are applying here. First let us calculate inventory. What are the things which we know about inventory? It is mentioned that average inventory will be for 1 month. That information we know. And other things which we know is that 70,000 units have to be produced. So what is the per unit cost of raw material? Inventory is always based on raw material cost. Okay, so we have to connect the inventory with raw material cost. Inventory 7. So first inventory we have to find out. Inventory, as I told in the working capital management, there will be 3 types of inventory. Raw materials will be there, work in progress will be there, and finished goods or completed products will be there. So raw material first we have to take 70,000 units into raw material cost per unit is 52 into 52. This is for how much? Into 52 is for 360 days. Why we have taken 360 days? Because it's mentioned in the correct question that production is carried out evenly throughout the year. It's an organization where 24/7 working is there. We could have taken 365, but on an average basis, providing 5 days leave, we are taking 360 days. That's an assumption which we are putting under the working capital management, or else the days, number of days to be taken will be given in the question. That you have to apply 200 days as working or 250 days as working will be should be given in the question. Otherwise, you could take 360 on average basis because it's mentioned that production is carried out evenly throughout the year. So 70,000 units per unit cost of raw material is 52 divided by 360 is the average working capital which we require for a day. This is calculated for per day. So 70,000 units into 52. 52 is the raw material per unit cost divided by 360 into 30 days. We will get the raw material. Why 30 days? Because average raw material maintained by the organization is 1 month. So 30 days we will get raw material. Like that all things will be calculated. Let us check work in progress. As I told, inventory includes raw material, work in progress and finished goods. Work in progress how will take? 70,000 units into work in progress. We have to apply the cost. We have to apply the total cost, not raw material cost, because work in progress includes raw material, labor and overheads. So total we are taking 70,000 into 110.5 divided by 360. We will get per day work in progress, multiplied it with 15 days. Why we are taking 15 days? It's mentioned average work in progress is half a month. Half a month means 30 divided by 2, 15 days. Okay, so we will get the work in progress. Next you calculate finished goods. Why we are calculating finished goods? Because inventory constitutes raw material, work in progress and finished goods. So 70,000 into finished goods also you have to take the original cost 110.5 divided by 360. We will get 1 day finished goods stock, and it's again inventory basis we are taking finished goods stock for 30 days. So we'll get the total inventory. This is how we are calculating inventory. Like that debtors we could calculate. Debtors, you see, it is mentioned half of the sales are on credit basis. Means what? Half of 1/4 of the sales are on cash basis, and some informations are regarding debtors are given. Debtors we have to maintain 2 months. So that information we know, that is why we have taken 60 days here. and of the total sales, 1/4 is on 1/4 of sales are on cash basis. So we have to exclude the cash sales. So 70,000 is the total units produced. 70,000 into 1/4, 17,500 is cash sales. So the balance is debtors. So we got the debtors. Debtors into what price we will apply? We will apply, as it is no debtors, we have to apply the total cost into total cost divided by 360. We will get per day debtors, multiplied it with 60 days. Why? Debtors is 2 months. So 60 days we will get the total debtors. So inventories we found out, debtors we have found out. Cash balance, it is given directly in the question. Company will maintain 1,20,000 cash balance regularly. So 1,20,000. So these all three things, inventory, debtors and cash, we will get the total current assets. Okay, this is total current assets. Now, this total current assets is also known as gross working capital. From the gross working capital, we have to deduct current liabilities. What constitutes current liability? Creditors. Creditors. No, what is the total units produced? Same application, 70,000 units into. No, we have to take creditors on the basis of raw materials. Only for the raw material purchase, we have credit balance. So 52 is the raw material price. 70,000 into 52 divided by 360. 1 day we will get into 30 days. Why we have taken creditors 30 days? Because credit allowed by supplier is 1 month. So 30 days. So we'll get the creditors. Outstanding wages. No, the time lag is mentioned 1.5 weeks. So outstanding wages. So for 70,000 units, 1.5 weeks means 7 plus 3, 10 days we are taking. 10 days and 360 as usual we are taking. What is the price we are taking? For its wages, we have to take the labor cost, per unit labor cost. 70,000 into 19.5 divided by 360 into 10, we will get the outstanding wages. Then outstanding overheads. Overhead time is also mentioned. 1 month time lag is there. Overhead, price, we have to take it on per unit overhead price. So 70,000 into per unit overhead price 39 divided by 360 into 1 month time is there for overhead. So 30 days we get outstanding overheads. So what we are calculating under this problem? This is estimation of net working capital type problem. So current assets minus all current liabilities, current assets total, that is inventory plus debtors plus cash, we got 23,57,708.33 minus current liabilities 5,68,750. That we got from adding creditors and outstanding expenses. We got current liability and we found out net working capital. So this problem is all about, based on the number of units produced, that is 70,000, based on the per unit cost of the product with the given split of raw material, labor, overhead, profit and sale price, and based on the average working capital cycle and other information, extra information regarding cash balance, we are finding out the net working capital. So it's very easy problem, that is current assets minus current liability. We'll get net working capital. It's very important problem for the examination. So you could see the rest of the problems in next video. Thank you.